Aha, you say, Vinney, oh my gosh, look over here, how much? I don't know what to do. Don't worry about it. It's simple. I'll show you. See, right there, the first portion is to just write the address of the property, the date you are underwriting it. When you do a new version, you put a new date, update, you put first date here, then you update every other dates, update version 1, 2, 3, 4, 5, underwriting. I like to have sometimes 13 versions, by the way, because a lot of new information keeps on coming to you. Then you don't want to go and erase the old one, but you keep on saving new, okay? Then you write the address, city and all that. Then how many number of units, property name, everything. Then purchase, strike price, what the whisper price or strike price, which is calculated over here also. But that's a little bit more advanced. But go ahead and see what you are going to be, buying it at. Then it calculates all those things. The only yellow you put in, remember yellow cells only, and it will do itself, its own, all the works, everything will be all done. Then of course you write down. Now let me take you here. After this one, we have this section in the middle, and that is seller side. So you fill seller side first. Then you look at from there, you go to the left side and say ours. Ours means yours. When you buy the property, when you pick up those keys from the seller, close it, all that, then you start looking at those numbers. So a lot of these numbers will be the same numbers, by the way. But this gets populated from where? It gets populated from the rent thing there, right? Okay. So the rent is the one which is from the rent mix. It comes over there. And then you say, okay, this physical vacancy is 5% there, but the lender is going to need 10%. You do 10 there, okay? Then concessions, if there are some concessions that the seller is doing it's showing up in the P&L, then you go ahead and put that over here. Loss of lease, remember that amount? Loss of lease also is always there, because what that means is you can never have a resident or tenant. We don't say tenants. Remember, residents, they are able to not always be paying the highest market rent, because the rent increases every month, every week, and things like that, right? So that's why there's always loss to lease. That's what you put down there, okay? And then we got, the non-revenue units. Wow. That's the model unit, or if they're counting one of the unit as the office or laundry room or like that. So that's non-revenue units, we call them right there, okay? Then we go, okay, total rental income. It's going to do its work and it's going to show up here, and percentage is going to show up here and everything. Then you go to utility reimbursement. Remember, so find out if the seller is actually doing the utility reimbursement, which is what percentage it is of the total bill. See, utilities bill is down here. So these are the expenses and all that, right? This is income right there, and this is the expenses. So it's very simple. Income, expenses, and on the right side is the mortgage. Mortgage information, what's the market rent upside, it's going to show up here by itself. And then this is your closing cost. Okay, so information of the property. Then we got the pro forma numbers, actual numbers, what the seller is getting in revenue, what he's spending or she's spending in the expenses from the P&L. And then we have also we have token. ROT means rule of thumb. Rule of thumb, we have also given you rule of thumbs over here also, but you have to compare these with the actual cost also to arrive at these numbers, okay? So, the best is to look at rule of thumb, but if there is more excesses amounts on the seller side over here, then you increase that number, all right? So that's how that is work. Now, what's over here is, as you see, the purchase price, down payment, what percentage, then down payment will calculate by itself, remember? Then the interest rate, what's the interest rate? And then amortization term. Is it a 20-year or 25-year or 35 years hard loans right there? So you put down right there. But the thing is, we calculate automatically for you annual debt service with principal and interest will be calculated, and interest only will be calculated here automatically for you. How do we do it? You might ask me. We have actually, if you look through here, underwriting is here, assumptions is this tab, all intertwined. You can only fill in the yellow, remember, yellow cell. That's all. And then we'll have 5-year projections already done for you guys. It's amazing what this worksheet will do for you. This is the best analyzer. And then you could change the yellow things over here. All the yellow things, please, we don't want to go into too much detail. We'll do some more lecture on that, but the thing is 5 years and then 10 years. We give you 10 years also, the whole thing. And it all calculates for you. Then we got the unit renovation schedule if you're doing, upgrading and you're putting more money into the units to increase the rents. Then additional value add if you're doing, we have a whole tab designed for you to do that also. Then equity gain on sale. What's the exit cap rate? You put it down there, sales expense percentage, you put it down and everything. Closing costs, all that, it's going to calculate for you. Then we got the cash flow for the investors. If you are the investor, then you have the whole enchilada to yourself, right? But this is the one where you could, if you're getting an investor for 50,000, 100,000, whatever, then it calculates for them right away. That's great. And then, of course, that after the cash flow, I was going to kind of move myself. Acquisition, there we go. So the acquisition cost, how much is it? The funds raised by the sponsor, how much we want to raise, all that is done for you in this tab. Remember, you only fill in the yellow. Remember, I would rather you just save it as a master on your desktop or wherever. Then you use a version of it, okay? For your one property, version of it for second property, third property, but keep the original there, all right? And come back to the, our academy also. We might have a version which is upgraded, all right? So you want to do it. And then partnership, if you have some sponsors, some loan sponsors, what percentage you are giving them, some team members in your team, all that is done for you over here also. As you know, we get paid in cash flow. We get paid in equity gain at the back end when we sell it or waterfall. And then we have the acquisition fee. So that's how 3 ways we get paid. And if you're managing the property yourself also, then you get paid the 4th time, which is the property management fee. But I do want to show you this mortgage calculator also. Schedule, we have added it in here. So that's where we get all the right numbers for the principal and interest and everything. Don't worry about it. Nothing to do it. But this is kind of, shows you over here. So let's go back to our 5-year projection. Actually underwriting. I would like to take you to underwriting here, which is right over here. Underwriting. Alrighty. So like I was saying, mortgage you have to do right there. Then interest rate, everything, amortization, I covered that with you. Annual debt service will be calculated. Now this is closing costs. So you give a percentage to the closing cost, to the loan, guaranteeing fee we call it, because we have 2 acquisition fees. One is called the closing cost and loan guaranteeing fee percentage we make. And the other thing is the acquisition fee, which is the loan points go to the lender. If you're using a broker or Fannie Mae, Freddie Mac like that. And then the acquisition due diligence fee is 2%. So we split 2 and 2 as 4% total of the purchase price, as for all the hard work that you do, guys. I'm telling you, that was something my coach and my mentor taught me 15 years back. And I've stuck with it because all the hard work we put into as a syndicator, as the loan guarantor, as dealing with the ins and outs on a daily and weekly basis of the asset, we deserve good payoff, and that's why that 2 and 2 is there, okay? If you want to do it 1, you can change that number. It does say yellow, so that way. Acquisition fee amount will be calculated. Legal fees, that's the legal for making the LLCs, for closing, legal fee, for title insurance, legal fee, and then also our syndication, if you're syndicating the deal or forming, LLCs and all that. So that's going to be the other one, which is going to be also put over there. Total closing cost. Now, remember, in the white, you don't touch it, but in the yellow first year, insurance, usually lenders want 12 months of insurance. That's what you will put down there. Utility deposits, you will put down there. Depends on the, city, how much they charge, 5,000, 4,000, or 10,000 sometime, or sometimes they take surety bonds also for changing the lights and utilities, water, trash, sewer into your new LLC. Remember, you just formed the LLC to buy this property in certain town. It has no track record. So that's why they want you to put a deposit, water deposit, sewer deposit, let's say, all like that, because then they are sure that you're going to pay the bill, as you take over the property. That's what that is. And then CapEx, huge, huge, huge. You got to really make sure that you are doing a great, great job in thinking through what the value add is going to be, how much, different maintenance is there from the property seller, so that you are able to allocate so much to the upgrade of units, or if the boiler needs to change, that money, parking lot, if there are some roof repairs to be done, all those things, right? If there are staircases to be, worked on, or the exterior paint or curb appeal, the signage, all those things cost money. So that's what, if you want to raise that money from your investors, you need to put it in here, or you could put it in the loan amount, which is up there. So you can actually add that amount up over there, right over here where it says 20% down. You might say, okay, if the bank is going to pay you for, 400,000 or so, what percentage is that of the total sales price? So that will be also financed, we call it. You could put that up there. And then this amount will be 0, but the total is going to show up how much you need to raise. But that amount of the value add will be financed because the bank is giving you a loan. Remember, the money that you get from your investors, from your joint partners, or your own money, that is the costly money. The cheaper money is from the bank, or Fannie Mae, Freddie Mac, or CMBS, or HUD loans and things like that. So it's very, 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 very important that we, get as little money raised, so that we have to pay them as equity partners, as cash flow every month or every quarter. We pay quarterly. We've been doing it, and and the key thing is that we want to perform well, so that they are able to see the best of the best with you. And if you have not really gone through my lectures and modules, please go through them. Lots of note taking, lots of comments, please put. We would like to cater to your needs, because that's the real deal, is to really learn the material and then raise lots and lots of money. That has been the biggest reason why I have done so well. And I wrote the book also, as you know. I don't know if you've read the book yet, Apartment Syndication Made Easy, which teaches you so many great things. And of course, I've been a motivational speaker all my life. So I wrote another book also, which is on, the success. Positivity brings profitability. That's a great book also, which really will teach you how to really move the needle and be excited, and don't just spend few hours, but just get obsessed to really learning the material in this worksheet and all the modules, but then also crush it on a weekly basis and join our mastermind and elite group, and you'll be so happy that you have taken those steps to move further, at a much faster rate. And of course, I also do personal coaching also, which is more expensive, but I coach myself with my team and meet every week or every other week personally, and then give out those great nuggets also. So again, remember to write the notes that you're going to look for, and go ahead and look at these rules of thumb. Then of course, brokers information you could put there. Yellow things are the ones to really fill in. I mean, that's why we designed this worksheet, so that you could take time to fill these pros and cons. Why are you so excited to buy this property? What are some of the notes? What are the comments? Why this deal makes sense to invest. Underwriting, analysis, notes right there. And then questions for the brokers and their answers. I mean, all these things are designed to crush it. Because I have closed on all 34, 35, God willing, will be 60, 80 deals to 3 billion is my goal. 3 billion with a B. But the thing is, you got to do it right. Everything, so that you don't fall apart, and fall apart or lose money of your investors and things like that. So you want to be very committed and do all these things. Okay. Then, of course,